Good morning and welcome back to Morning Markets. Today we're going to focus on the Bank of England and what their interest rate decision following the inflation report that we got through on Wednesday. Yesterday, one of the key focuses for investors and market participants was the Bank of England meeting, where they decide where the appropriate level of interest rates should be. The focus for markets was even greater because of the inflation report that came out on Wednesday. We saw inflation come in higher than expected, beating forecasts, rising from 10.1% year on year to 10.4% when we look at headline inflation. When we strip out the more volatile components of food and energy, core CPI rose from 5.8% to 6.2%. So a big concern for the Bank of England. And the challenge the UK faces is it's highly dependent on goods and commodities from abroad. And they have been very high, especially when you have to import them when the pound has been weak. It's been falling over the last 12 months against the US dollar, so that pushes prices up to uncomfortable levels. The decision yesterday from the Bank of England was to raise interest rates again. This is its 11th consecutive increase in interest rates over the last 14 months, pushing the base rates up from 4% to 4.25%, and really following in the steps of the Federal Reserve on Wednesday and the European Central Bank last week of continuing to fight inflation by putting up interest rates higher. In terms of how the members voted, there's 9 members, 7 of them voted to increase interest rates by 0.25%, speaking about economic growth in the UK being slightly better, the employment situation being better, and therefore that risks inflation being higher for longer, so therefore felt it appropriate to increase interest rates. In terms of what we can expect going forward, inflation is expected to decline significantly as we get past May due to the rolling base effects, given that we've seen oil price and natural gas prices in particular collapse over the last 12 months. So the market is expecting inflation to fall. When we look at market pricing, interest rates are only expected to increase by another 0.25%, and then expected to see interest rate cuts towards the end of the year as that inflation starts to roll through significantly. That's everything from us today. Thank you for listening, and we'll see you next week.